就业、稳物价工作。疫情防控较快平稳转段，生产需求
The response brought about a steady recovery for production demand. Employment and prices remained stable on the whole. Individual incomes continued to rise. Market expectations improved significantly, and the economy was off to a good start. According to preliminary estimates, the GDP in the first quarter reached 28,499.7 billion yuan, up by 4.5% year-on-year at constant price, or up by 2.2% over that in the fourth quarter of 2022. By industry, the value added of the primary industry was 1,157.5 billion yuan, up by 3.7% year-on-year. That of the secondary industry was 10,794 billion yuan, up by 3.3%, and that of the tertiary industry was 16,547 billion yuan, up by 5.4%. First, agricultural production was stable and animal husbandry grew steadily. In the first quarter, the value added of agriculture witnessed a year-on-year increase of 3.6%. The winter wheat had a generally normal growth, and the spring farming and preparation was carried out in an orderly manner. According to the year-round planting intention survey, the planting area intended for wheat, rice, and corn nationwide was generally stable. In the first quarter, the output of pork, beef, mutton, and poultry was more than 24 million tons, up by 2.5% year-on-year. Of the total, the output of pork, beef, mutton, and poultry was up by 1.9%, 5.0% and 3.4% respectively. The pork of milk was up by 8.5% and of eggs 2.8%. The number of pigs registered in stock was 430 million, up by 2% year-on-year, and about 200 million pigs was slaughtered, up by 1.7% in the first quarter. Second, industrial production recovered gradually, and expectation of enterprises improved generally. The total value added of industrial enterprises above the designated size grew by 3% year-on-year in the first quarter, 0.3 percentage point higher than in the fourth quarter of 2022. In terms of sectors, the value added of mining industries increased by 3.2%, that of manufacturing 2.9%, that of production and supply of electricity, thermal power, gas, and water increased by 3.3%. The value added of equipment manufacturing increased by 4% and 2.5 percentage points higher than in the last 2 months. And an analysis of types of ownership showed that the value added of state-holding enterprises was up by 3.3%, that of shareholding enterprises 4.3%, that of foreign-founded enterprises from Hong Kong, Macau, and Taiwan was down by 2.7%, that of private enterprises up by 2.0%. In terms of production, the production of solar cells and new energy automobiles was up by 53% and 22% respectively. In March, the value added of industry enterprises above the designated size grew by 3.9% year-on-year, 1.5 percentage points higher than in the first 2 months, or 0.12% month-on-month. In March, the PMI stood at 51.9%. In the first 2 months, the total profits made by industrial enterprises above the designated size were 887 billion yuan, down by 22.8%. Third, on the service sector, in the first quarter, the value added of services went up by 5.4% year-on-year. And specifically, the value added of accommodation and catering, information transmission software and information technology services, financial intermediation, leasing and business services, and wholesale and retail grew by 13, 11, 7, 6 and 5.5% respectively. In March, the index of services production increased by 9% year-on-year, 3.7 percentage points than that in the first 2 months. And the services production of accommodation and catering, information transmission software and information technology services, and transport, storage, and post went up by 30%, 12% and 11.9% respectively. In the first 2 months, the business revenue of service enterprises above the designated size grew by 3.4% year-on-year. In March, the business activity index for services stood at 56.9%, and the business activity expectation index was 63.2%, among which the business activity index for industries like retail, railway, transportation were above 60%. Fourth, market sales recovered fast and upgraded goods increased largely. In the first quarter, the total retail sales of consumer goods reached 11,492.2 billion yuan, up by 5.8% year-on-year, and that in the fourth quarter of 2022 was down by 2.7%. Analyzed by different areas, the retail sales of consumer goods in urban areas reached 9,966.4 billion yuan, and that in rural areas, 1,500 billion yuan, up by 6.2%. Grouped by consumption patterns, the retail sales of goods were over 10,000 billion yuan, up by 4.9%. The income of catering was 1,200 billion yuan, up by 14%. Goods for basic living enjoyed good sales with the retail sales of clothes, shoes, hats and textiles, and of grain, oil and food by enterprises above the designated size up by 9% and 7.5% respectively. The sales of upgraded goods went up markedly. The retail sales of gold, silver and jewelry and of books, newspaper and magazines by enterprises above the designated size grew by 13.6% and 13.4% respectively. The online retail sales reached 7,200 billion yuan, up by 8.6%. Specifically, the online retail sales of physical books was 2,800 billion yuan, up by 7.3%, accounting for 24.2% of the total retail sales of consumer goods. In March, the total retail sales of consumer goods were up by 10.6% year-on-year, 7.1 percentage points higher than that in the first 2 months. Fifth, investment in fixed assets increased steadily, and investment in high-tech industries grew fast. In the first quarter, the investment in fixed assets reached 10,700 billion yuan, up by 5.1% year-on-year, the same as that of the previous year. Specifically, the investment in infrastructure grew by 8.8% year-on-year, that in the manufacturing grew by 7%, and that in the real estate development declined by 5.8%. The floor space of commercial buildings sold reached 299 million square meters, down by 1.8%, and the total sales of commercial buildings were 3,000 billion yuan, up by 4.1%. By industry, the investment in the primary industry went up by 0.5%, in the second industry up by 8.7%, and that in the tertiary industry up by 3.6%, and private investment went up by 0.6%. The investment in high-tech industries grew by 16%, of which the investment in high-tech manufacturing and high-tech services grew by 15.2% and 17.8% respectively. In terms of high-tech manufacturing, the investment in manufacturing of electronic and communication equipment and in manufacturing of medical equipment, measuring equipment, instrument and meter grew by 20.7% and 19.9% respectively. In terms of high-tech services, the investment in e-commerce services and services for transformation of sci-tech achievements grew by 51.5% and 51.3% respectively. The investment in social sectors grew by 8.3%. Specifically, the investment in health and education grew by 21.6% and 6.2% respectively. Sixth, imports and exports of goods kept growing and trade structure continued to optimize. In the first quarter, the total value of imports and exports of goods was 9,887 billion yuan, an increase of 4.8% year-on-year. The total value of exports was 5,648 billion yuan, up by 8.4%. The total value of imports was 4,200 billion yuan, up by 0.2%. The trade balance was 1,400 billion yuan in surplus. The imports and trades of general trade increased by 7.9%, accounting for 95% of the total value of imports and exports. The imports of exports by private enterprises grew by 14.54%, accounting for 52.4% of the total volume of imports and exports. In March, the total value of imports and exports was 3,700 billion yuan, up by 15% year-on-year. The total value of exports was 2,100 billion yuan, up by 23.4%. Seventh, consumer price rose mildly and producer prices for industrial products dropped year-on-year. In the first quarter, CPI rose by 1.3% year-on-year. Grouped by commodity categories, prices for food, tobacco, and alcohol went up by 2.9% year-on-year. Clothing up by 0.7%, housing down 0.2%, articles and services for daily use up 1.2%, transportation and communication up 0.1%, education, culture and recreation up 1.7%, medical services and healthcare up by 0.9%, and other articles and services up 2.7%. In terms of food, tobacco and alcohol prices, the price for fresh fruit up by 11%, pork up 0.5%, grain up by 2.5%, and fresh vegetable down by 2.9%. And core CPI grew by 0.8% year-on-year. In March, the consumer price index went up by 0.7% year-on-year and down by 0.3% month-on-month. In the first quarter, the producer prices for industrial products went down by 1.6% year-on-year. Specifically, the prices in March dropped by 2.5% year-on-year or maintained the same level month-on-month. In the first quarter, the packaging prices for industrial producers went down by 0.8% year-on-year. Specifically, in March, the prices dropped by 1.8% year-on-year. Eighth, employment was generally stable and surveyed unemployment rate in urban areas declined. In the first quarter, the surveyed urban unemployment rate averaged 5.5%, down by 0.1 percentage points over that of the fourth quarter last year. In March, the surveyed unemployment rate in urban areas was 5.3%, down by 0.3 percentage points over that of the previous month. The surveyed unemployment rate of population with local household registration was 5.1%, and with non-local household registration was 5.6%. Specifically, the surveyed unemployment rate of population aged from 16 to 24 and from 25 to 59 was 19.6% and 4.3% respectively. The surveyed urban unemployment rate in 31 major cities was 5.5%, 0.2 percentage points lower than that of the previous month. The employees of enterprises worked 48.7 hours per week on average. By the end of the first quarter, the number of rural migrant workers totaled 181 million. Ninth, residents' income increased steadily, and income of rural residents grew faster than that of urban residents. In the first quarter, the nationwide per capita disposable income of residents was 10,870 yuan, a nominal growth of 5.1% year-on-year, 0.1 percentage points faster than that of the previous year. The real growth was 3.8% after deducting price factors. In terms of permanent residents, the per capita disposable income of urban households was 14,388 yuan, a nominal growth of 4 percentage points year-on-year, and a real growth of 2.7%. The per capita disposable income of rural households was 6,131 yuan, a nominal growth of 6.1%. In terms of income source, the nationwide per capita salary income, net business income, net property income, and net income from transfers grew by 5%, 5.8%, 4.1%, and 5.1% in nominal terms, respectively. The median of the nationwide per capita disposable income of residents was 8,895 yuan, with a nominal growth of 4.6% year-on-year. In general, in the first quarter of this year, as we secured a quick yet smooth transition in COVID response, various policies and measures to stabilize growth, employment, and prices delivered earlier than expected, encouraging outcomes. Positive factors kept accumulating, and the national economy showed a steady recovery and got off to a good start. That said, it's important to note that the international environment is still complex and volatile, and weak domestic demand is constraining economic recovery, which is not on a solid footing. We will take deep thought on socialism with Chinese characteristics for the new era as a guideline, fully implement the guiding principles of the 20th CPC National Congress and the first and second plenary session of the 20th CPC National Committee, and earnestly implement the arrangements of the Central Economic Work Conference and the NPC and CPPCC sessions. We will take keeping stability the top priority, and we will fully and faithfully apply the new development philosophy, move faster to create a new development paradigm, concentrate on promoting high-quality development, Apply macro policies in a systemic and targeted way, take a comprehensive approach to unleash the potential of domestic demand, vigorously deepen reform, expand high-level opening up, and get off to a good start in building a modern socialist society in all respects. Thank you. Now, Mr. Fu is ready to take your questions. Please identify your affiliation. Thank you. Shenzhen TV. Industrial production continued to rebound in the first quarter. What's the reason? What positive changes have occurred in the operation of industrial operation? Will industrial production continue to accelerate in future?
Thank you for your question. In Q1, industrial production steadily rose. Now the policies for stabilizing growth is paying off, and the industrial and supply chains are recovering. So there are some positive changes in industrial production. In the first quarter, the primary industry grew by 3%. In March, it grew by 3.9%, faster than the previous 2 months by 0.5%. Most of the industries are growing in Q1. 23 industries have maintained growth. More than 50% of the industries have also rebounded. Second, manufacturing and equipment industry are playing a clear role in supporting economic growth. China's capacity and level for equipment manufacturing is enhancing in Q1. The manufacturing industry grew by 4.3%, and industries above a designated level contributed to more than 42.5% of growth. Third, raw materials also see a clear rise. With the economy recovering, investment has rebounded, which also boosted manufacturing and also raw materials. In Q1, raw materials industry grew by 4.7%, more than 1 percentage point higher than the manufacturing industry. And the manufacturing and processing industries for metals and non-ferrous metals have all increased. The steels have increased by 5.8%. And fourth, we have also seen improvement in smaller and micro companies. It grew by 3.1% year-on-year, higher than that of the industrial sector. And the prosperity index of the micro companies also was up 1.7 percentage points than the previous year. In addition, the expectations are also higher. PMI has been above 50 for 3 consecutive months. Green energy and vehicles have maintained a double-digit growth. That said, we must stay clear-eyed of the complex international environment. There are still uncertainties in external demand, and there is still a lack of domestic and international demand. Now, companies still face some difficulties, so going forward, we'll continue to implement the policies for stabilizing growth, focus on boosting domestic demand, promote green development and transformation, upgrade the traditional industries, strengthen the emerging industries, and promote healthy growth of the secondary industry. Thank you. Next question, please. With China Media Group, in Q1, the Chinese economy has stabilized and rebounded. What are the features? What is your assessment of Q1? Thank you for your question. I know there is a lot of interest in China's economic performance in Q1. Well, the various regions and departments are implementing the decisions of the central authorities. We're committed to steady progress, and we are also committed to promoting and stabilizing growth, jobs, and price markets. Our macro policies are paying off, and work and life is back to normal. Production demand is steadily rising. Jobs and prices are basically stable. Expectations for the businesses are improving, so the economy is off to a good start. First, economic growth has stabilized and rebounded. In the first quarter, GDP grew by 4.5%, up by 1.6 percentage points from Q4 last year, and 2.2 months from the previous month. In agriculture, it has maintained steady growth. Spring planting is advancing in an orderly manner. Animal husbandry grew steadily, and agricultural production is stable. In Q1, agricultural, forestry, and fishery grew by 3.8% year-on-year, and meat production output grew by 2.5%. In Q1, industries above a designated scale was up by 3 percentage points year-on-year, and services also rebounded. Obviously, in Q1, services was up by 5.4% year-on-year, 3.1 percentage points from Q4 last year. The in-person concentrated service sector has especially recovered and very fast. Second, domestic demand is expanding gradually. Market sales are increasing. There are more opportunities for people to spend. They're also having greater expectations for consumption, so there is a rebound clearly in the service sector. In Q1, total retail sales was up by 5.8%, and sales in services sector in the first quarter, it achieved a double-digit growth. Catering was up by 13.9%. Investment also grew steadily in Q1. Fixed asset investment was up by 5.1%. Investment in infrastructure and the manufacturing industry grew by 8.8% and 7%. Both are relatively fast. Third, jobs and prices are basically stable. The employment situation has improved. In Q1, urban surveyed unemployment rate averaged 5.5%, down by 0.1 percentage point from Q4 last year, among which in March the number was 5.3%, 0.3 percentage point from the previous year. CPI grew moderately. The supplies of goods and services are on the whole sufficient. CPI in Q1 grew by 1.3%. Deducting food and energy, the core CPI was up by 0.8%, which is basically stable from the previous 2 months. Fourth, high-level and high-standard opening up is making steady progress. We are vigorously stabilizing foreign trade and expanding our trade with emerging markets and developing countries, including those Belt and Road countries. In Q1, China's trading goods up by 4.8% year-on-year. Our trade with Belt and Road countries grew by 16.8% year-on-year. Given the complex external environment, the Chinese trade is very resilient. In the first 2 months, China's paid-in foreign investment grew by 6.1%, and that for high-tech industry was up by 32%. Fifth, transformation and transition continues to expand. In Q1, high-tech investment grew by 16%, and the online retail sales of goods was up by 7.3%, accounting for 24.2% of total retail sales. Green and low-carbon products also saw relatively fast growth in Q1. New energy vehicles and solar batteries output grew by 22.5% and 53.2%. Consumption is playing a bigger role in driving growth. The growth of final consumption expenditure contributed to 60.6% to total growth. Sixth, market vitality is growing. In March, PMI in manufacturing was 51.3%, staying above 50% for 3 months consecutively. PMI for non-manufacturing sector was 58.2%, up by 1.9 percentage points, among which the PMI in the services sector was up to 56.9%. In Q1, cargo volume and passenger volume both increased. Among them, the passenger volume for railway and air flights grew by 67.7% and 68.9%. Smaller enterprises also having a better day in Q1. Smaller companies above a designated level grew by 3.1% above the average industrial enterprises, and their prosperity index has also increased from Q4 of last year. And these are hard-won progress made despite the complex international environment. But in the meantime, the external environment is still complex and grim. The global economy is still slowing. There are still a lot of uncertainties and destabilizing factors, but domestic economy is still rebounding and recovering. There are still some lack of domestic demand and structural issues. Going forward, we need to implement the spirit of the Central Work Meeting on Economy and the Government Work Report, continue to implement science-based and targeted macro policies, unleash domestic demand, promote reform and opening up, and enhance both the quality and the quantity of economic growth.
Thank you for your question. This year, the increase in our imports and exports kept increasing. This is no easy feat, considering a low base. In the first quarter, the total value of imports and exports increased by 4.8%, and our exports grew by 8.4%. Considering that there are a lot of external uncertainties and the global economic growth is slowing, this is truly hard won. That said, we still face pressure in imports and exports because the world economic growth is sluggish. According to the forecast of the IMF, the world economy will grow by 2.8%. So this is lower than that in the last year. According to the latest products of WTO, the trade increase will be 1.7%, also lower than that of the last year. So the increase, because of the sluggish foreign demand, we are facing greater pressure. And also we are faced with external uncertainties. The inflation in Europe and the US is high. And the bank's fluid crisis are now aggravating this uncertainty. And we are also faced with geopolitical risks. The resurgence of unilateralism and protectionism are wreaking havoc. But despite these challenges, our foreign trade still has the strengths of dynamism and resilience, and we have the confidence in achieving our set goals. First, we have a complete set of industrial systems, so we can adapt to the changes in external environment. Second, we are committed to the opening up policy, and we are now exploring for new routes for our foreign trade. And in Q1, the increase of import and exports to Belt and Road countries stood at 16.8%. Third, the new drivers for our foreign trade is increasing, playing a more prominent underpinning role for our foreign trade. Recently, the General Customs Administration said in a press conference that in the first quarter, the export of solar panels and new energy vehicles increased by 6.9%. So considering these factors, our policies to stabilize foreign trade will take effect. That will do a great deal for us to make steady foreign trade improvement. Thank you for your question. As things stand in Q1, the increase in consumption has made a market recovery. So this may not be consistent with what you said. In terms of consumption, with the improvement in our COVID response measures and the policies to boost consumption to take effect, now this is especially so in the consumption in the service industry. And now consumption is playing a bigger role in driving our economy. As said in Q1, the contribution of consumption was more than 60%. So this is a market increase over that of the last year. And consumption was the biggest factor driving up our economy in the first quarter. And the total retail sale in Q1 increased by 4.8%, but in the fourth quarter of last year, that decreased. So this is an evidence for the rebound in consumption and the recovery in the tertiary industry is there for all to see. And now people are more and more going out for dining or some other contact services. In terms of the per capita individual consumption, now the nominal increase for service expenditure was 6.2%, higher than other kinds of expenditure. And the consumptions in the service industry also saw an increase of 0.3 percentage points among all consumption. And with the unleash of people's consumption demand, now the increase for some daily necessities also increased. In Q1, the retail sales increased by 4.9%, but in the fourth quarter last year, that was down by 1.7%. And 40% of commodities also showed greater sales, now especially in grain, cooking oil, textile, etc. For gold jewelries, also increased by about 13%. Third, the online and offline consumption saw an accelerated increase. And now we are seeing more consumption online. Online consumption increased by 7.3%. And the retail sales in offline sales offline shops also increased. Now, in March, the consumption and retail sales in offline shops was 3.6% higher than in the previous 2 months. And now the employment rate also shows signs of promise. Now, the general public have more confidence in consumption. In Q1, the average consumption tendency was over 60%. This is also an increase over the previous year. So generally speaking, the consumption is now making a steady recovery. But the willingness of consumption among the Chinese residents still has rooms for improvement. So next, going forward, we will provide more high-quality supplies and so as to unleash the potential of economic recovery to improve people's well-being. Thank you.
Thank you, with Nikkei. My question is about CPI. Core CPI in March grew by 0.7%. Although the economy is recovering after the COVID readjustment, the core CPI still grew only slightly. What is your take on the main reasons for the stalling core CPI? Is the Chinese economy at risk of deflation? Thank you for your question. Well, people are following prices very closely. Now there are also some discussions about whether the Chinese economy will face deflation. On the whole, the Chinese economy has no deflation, and there will not be deflation going forward. We know that globally, the definition for deflation is continued price decline, and which is also accompanied by less production demand and lower growth. But in Q1, CPI grew by 1.3%, which was a moderate growth. As for M2, it grew by 12.7% at the end of March, which is relatively fast. In Q1, China's growth rate was 4.5%, which is faster from last year. So on the whole, there is no risk for deflation. And in the first quarter, China's CPI is indeed declining. The reasons are caused by some temporary factors. First, the Spring Festival this year was in January, so there are some seasonal factors. After the Spring Festival, because of falling domestic demand, there will always be a seasonal decline in consumer prices. And second, some consumer goods and products also see their prices decline. With the weather warming, vegetables would also see a rise in their prices, but we see prices in other products such as pork. There is a sufficient supply of pork, so the prices are going down. All of this contributed to a decline in CPI. And third, on energy prices, which is also falling. China's energy prices are very much susceptible to the changes in the international prices. The international oil prices, especially crude oil prices, are falling, which also caused a decline in China's energy prices. So that's the energy prices. And fourth, the prices of automobiles have also declined because of the expiration of subsidies. There is a lot of discounts offered by automakers. And we can see that the Automobiles prices have down by 4.5%, and last year, because of geopolitical factors and COVID-19 at home, so prices last year were relatively high, and that is why we saw this decline or moderation in CPI this year. But on the whole, market supply is basically stable. That has remained unchanged. If we look at core CPI in Q1, it was up by 0.8%, relatively stable from the levels of the previous 2 months. And it also was 0.2% higher from Q4 last year. If we look at prices in the service sector, in Q1, it was up by 0.8%, and it was 0.3 percentage points higher from Q4 last year. If we look at the broader prices, we know that CPI mainly looks at the consumption by the consumers, but if we look at the whole economy, we need to look at different indicators. Well, some price indicators have also increased compared to Q4 of last year. So all these indicators point to no risk of deflation in China. Going forward, the Chinese economy will continue to recover with a sound momentum, and the prices will continue to drive and grow. There will not be a scenario where there will be a deflation. But because of the high base numbers in Q2 last year, because of the high international prices and COVID restrictions at home, so in Q2 this year, China's CPI may not grow at a very high level, but that does not point to deflation. So on the whole, in the second half of this year, the prices will rise back to a reasonable level. Next question, please. How would you assess the investment number in Q1? Now, private investment is at a low level. It was only up by 0.6% in Q1. What are the reasons? Thank you for your question. That is also a matter of great interest to the public. China is still the world's biggest developing country. The investment capacity is still falling behind that of developed countries. So to address the inadequacy in investment and to overcome technical issues and to promote high-quality development, we all need investment. This year, we have been expanding domestic demand and strengthen the supply side, reform, expand investment in the private sector and in people's livelihoods. Investment growth would also contribute to economic growth. In the first quarter, fixed asset investment was up by 5.1%. There are several features. First, investment in manufacturing is growing with a good momentum. China's investment in manufacturing has been #1 in the world, but in some key links, there are still some shortfalls, especially in the new round of technological and industrial transformation. There is great potential for upgrading manufacturing industry. We take China's manufacturing development very seriously. We are committed to innovative growth of manufacturing. And this year, the sector has been growing quite steadily. In Q1, it was up by 7%. And the investment in high-tech industry was up by 16%. Second, investment in infrastructure has also been growing. A lot of gains have been made in this field, but between the urban and rural areas, there is still a gap when it comes to infrastructure, and there are still some weak links that need to be fixed. And as we move to smarter and greener development, 5G and some other new technologies and industries are also accelerating. Recently, we have been working quite hard to accelerate manufacturing investment. And in Q1, their investment was up by 8.8%. Fourth, we have also increased the investment in people's livelihood. Starting from this year, we have increased input in supporting people's livelihoods and improving people's well-being. And that sector of investment has been growing by 8.3% in the first quarter. This would help ensure people's health. On the whole, China's investment is growing steadily. With its structure being improved, it could contribute to long-term growth, but there are still some constraints when it comes to investment. So going forward, we'll enhance the quality of investment, take a long-term view, and contribute to high-quality economic growth. As for the private sector investment you mentioned, there are a lot of factors. One important factor is the real estate market, which is undergoing some changes. When it comes to private sector investment in real estate, it was down by 13.8% in Q1. And private investment also faces some difficulties. For example, the falling profits of companies and some limitations in the market. So on the whole, we're still improving the market environment and giving more support to private investment to bring such investment to a more stable level. Thank you.
Thus, I heard that consumption contributed less to China's GDP growth during the pandemic. So I think it's different now. Will consumption play a bigger role in China's GDP growth? Thank you for your question. On consumption, I mentioned consumption this year, and the contribution of consumption to the general economy increased. Now, in the first quarter, the contribution rate was 66%. That was a marked increase over that of the last year. Going forward, we hope that this momentum will continue. With the gradual recovery of the economy, the job and employment is also improving, and the surveyed urban unemployment rate saw a market drop. And with more consumption scenarios, we will see a boost in our consumption, and in the medium and longer term, the per capita GDP in China reached 10,000. So this is a threshold for the consumption to be upgraded. So there is great prospects for our consumption. So the consumption will play an even larger driving role for the GDP growth. Thank you. Kyoto News. What's the economic outlook for the second quarter? There was a lockdown in Shanghai last year. So do you expect better numbers in the second quarter of this year? So what are the major risks, if there is any? Thank you for your question. On things going forward, because this is of great interest to you. In recent years, our economy has showed a promising, steady recovery, and the dynamism of all the market entities is reviving, and so has the market expectations lay a solid foundation for further recovery of the market. The internal dynamism of our market is still there, and the operation of the general economy is expected to go from strength to strength. Last year's base was low, so the economic growth rate will be higher than that in the first quarter. Then in the third quarter, because of the higher base, then the nominal figure will be lower. But if we don't just concentrate on all the sheer numbers, the economy will show a general trend of recovery. The first feature is that consumption will play a bigger role. And in recent years, consumption is now recovering and playing a more prominent driving role for our economic growth rate. And in the first quarter, consumption has driven up the economy better than it did in the fourth quarter last year. And now we are also driving up the consumption of new energy vehicles and large home appliances. So this is a combination of online and offline consumption and consumption in both urban and rural areas. And second, the increase in investment shows promise of continuing. And this year, investment saw a steady growth. In Q1, the fixed assets increased by 5.1%, and going forward, the upgrading of traditional industries and the innovative development of emerging industries will play a more supporting role for our physical economy. In Q1, manufacturing investment increased by 5.7%, and we will do as the State Council and the central government planned. And in the first quarter, the infrastructure investment grew by 8.8%, higher than other kinds of investment. And as the release or the unleash of demand for fixed and second homes, the property market also shows promise of recovery. All this will play a supporting role for the steady growth of the consumption. And third, the upgrading and transformation of industries will also continue. Now we are applying the innovation-driven development strategy, which is now driving the industrial upgrading. And all the new technologies such as AI and 5G and all the emerging industries and technologies have also played a driving role. And now we are seeing that we are building more clusters of industries and utilizing the scale of economy. And as we are going greener and more low carbon, now we are seeing that a lot more industries are now trying to cut off carbon emissions. And the products such as the solar panels also saw rapid increase. And as the industries will move up the technological and environmental production chain, and the macro policies will also show effect. And in recent years, all the government departments have fully and faithfully applied what the central government have required, and we have focused on stabilizing employment, the market, and the industry. Going forward, all the decisions and planning of the CPC Central Committee and the State Council will be implemented. So that will lay a solid foundation for our economy to show steady recovery.
Thank you. With the paper, the China's PPI was in negative territory for 6 months. What is your assessment? Well, that is also an issue of great interest. PPI has been declining for quite some time to even a bigger margin. In Q1, PPI was down by 1.6%. PPI for production materials was down by 1.3%. That is the main factor. The expansion of the PPI's decline are caused by two reasons. One is imported reasons. This year, the world economy is slowing, market demand is falling short, and commodity prices have also fallen, which also caused lower prices in commodities in China, including non-ferrous metal. Oil and natural gas exploitation was down by 5.3%. The second factor is because of the high base numbers last year, because of geopolitical crisis and other factors, the international commodity prices are quite high, and domestically, the supply is quite tight. So last year's PPI was 8.7%. That is a very high level. That would also affect this year's number. If we look at the numbers month on month, the PPI was basically stable. In January, the PPI was down by 0.4%, and in February and March, it was basically at the same level. This is, on one hand, because domestic demand is recovering, which drives up the prices of cement and steel. In Q1, both grew by 0.1%. And because of high commodity prices, rising commodity prices, and also the international commodity prices, our prices in non-ferrous metal and oil have also declined. And because of the weather conditions, there is less use of coal. Well, because of the various factors, the month-on-month PPI figures are basically stable. And going forward, China's domestic demand will gradually recover, but external factors will continue to have an impact, and the base numbers from the previous year are still quite high. So PPI is still likely to decline this year. But with this year progressing, the PPI will continue to return to a more stable level. With China News Radio, the service sector this year has been recovering at a faster speed. What is the reason for that? What is your expectations for the service sector going forward? Service sector in this year has been recovering quite well. That is a highlight of China's economy in Q1. Service sector now accounts for a bigger share than other industries, actually more than half of China's economy. During the pandemic, the service sector has slowed down, which has affected jobs and economic growth. But since the start of this year, as our policies continue to pay off and life and work returning to normalcy, service demand, especially in-person concentrated service demands, has been quickly unleashed, and service sectors have quickly rebounded, which provide a strong underpinning for economic growth and the job market. In January, the service sector grew by 5.1%, up by 3.1 percentage points from Q4 last year, contributing to more than 60% of GDP. The reason is that in-person service sector has rebounded quickly. People are now dining out, living and having caterings and traveling outside. Retail sales grew by 5.5% in Q1, 5.2 percentage points higher than Q4 last year. Catering and accommodation was up by 5.6% in Q1. Second, transportation has also recovered quickly as people go back to their normal work and life. There is a greater movement of people and goods. Transportation sector is recovering quickly. In Q1, transportation, storage, and postal services was up by 4.8%, a clear recovery. And third, modern service sector is also recovering with rapid digitalization and the information development. Information technology has also been growing rapidly. In Q1, the information sector grew by 11.2%, faster than the rest of the service sector. And finance services are also expanding, providing reasonable financing to meet the needs of the companies. In Q1, the financing service sector was up by 6.9%. And the expectations for growth in the service sector is also up. And the service prosperity index is in the expansionary range for 3 months, which indicates expansion in the service sector, which is accelerating. In the meantime, the service sector could provide a lot of jobs. So recovery in the service sector could also boost employment. But the recovery in the service sector is still at an initial stage. It is not on a solid footing yet. So going forward, we'll continue to provide more high-quality services and promote healthy growth of the service sector. The last question, please.
The Beijing news. Two figures are in the spotlight this employment season. 11.58 million university students are expected to graduate in 2023. This year, for the first time, the number of graduates in Beijing with a master's degree or a doctorate degree expected to exceed that of those with a bachelor's degree. What's your take on this? We have always taken a employment first policy. This year, the labor participation rate has saw a steady increase, and unemployment rate, and especially in March, was down markedly, and the total workforce increased both on a year-on-year and month-on-month terms. In terms of unemployment rate, in March, the surveyed urban unemployment rate was 5.3%, down by 0.3 percentage points month-on-month. With the steady recovery of the economy now, all the enterprises have greater demand for the workforce. Now the unemployment rate for those between 35 to 59 was 4.3%. And this year, all the rural migrant workers saw a rise in number. And now with a better economy and better employment supporting policies, and the unemployment rate for rural migrant workers was 5.3%. That was a decrease. And in industries like construction, among others, the unemployment rate also decreased. So this is a boon for rural migrant workers. And for the major cities in China, last year, the unemployment rate was a problem. But this year, in March, the unemployment rate in the 31 major cities saw a decrease. But what is worrying is that the unemployment rate for the youth increased, so this is worrying. For example, the unemployment rate for those between 16 to 24 increased this year. And this year, there will be more college graduates entering the workforce. So we are under a new pressure. But despite this, as the economic recovery will continue and there will be more room for employment, the employment situation for college students will improve. And for those between 25 to 59, so these are the staple in our workforce. The unemployment rate is the lowest. That means, as you said, many of the college graduates will hold a master's or doctorate degree. So I think that their employment situations will pick up. So I think that the steady improvement in the labor market will continue to improve. But in terms of some structural problems, we need to keep watching out for them, and we should give more supporting policies to university graduates, and special emphasis should be given to industrial upgrading to provide more high-quality job opportunities. Thank you. Thank you for your presence. So that's it for today's press conference.